but whoever gets it. So 47433.
This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning due to a variety of reasons. For one, we had the UK coming up with their better than expected gross domestic product report, up 0.3%. The guess was up 0.1%. Also, we had jobless claims falling to 339,000, better than the guess of 350,000. And we are hearing reports that there is a very good chance that the European Central Bank at their upcoming policy meeting will lower interest rates. Also, we have the Fed on a monthly basis coming in buying $85 billion in treasuries and mortgage-backed securities. Of course, that's an ongoing bullish influence. However, we are seeing evidence that the global economy is slowing in spite of the UK GDP numbers. So I think that influence is starting to have more of an impact. And I think ultimately that will win out in spite of this aggressive easing policy from the Federal Reserve. In the currencies, with the UK GDP coming in as strong as it did, or at least stronger than the guess, we are seeing the European currencies advancing, especially the British pound. However, the euro coming off of its highs on ideas that the ECB will cut their base lending rate by 25 basis points down to a new record low of 50 basis points at their May meeting. Also some short covering coming into the Japanese yen ahead of their policy meeting tomorrow. So from here, I would expect higher prices for the dollar index, lower prices for the yen. I think the pound, even though it's higher now, will probably give back a good portion of the gains. And the commodity currencies, even though they are a bit stronger this morning, I think the Canadian and the Australian dollar will work lower into today's close. Over in the credit markets, as the jobless claims report coming in a bit better than expected, some pressure in treasuries. However, we feel that this market is likely to head higher as the global economy slows, and I would expect futures to trade higher on the day, even though they're lower now. Longer term, I think we are in a bull market in the treasuries that could last for several months. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.